What is happening? What a freaking Monday. Kirby, no. You're good, man. It's a crazy, crazy Monday. Holy moly, Tesla. What a stock, man. What a stock. If you didn't know, funny. I was with our boy Amit last week, and I was like, 260 Tesla. He's like, when? I'm like, real fast. Here she is. Target achieved. Actually, I hate to say it. I think she might have more in the tank, man. This thing is wild. Absolutely wild. I don't know if Sharky's going to join us. Actually, Frankie might join us. I see him trying to hop in, but it looks like he's on his phone, so we'll see. We'll see. Mr. Frank, I see you, man. Wave to me if you're good to go. Oh, he's in. All right, I'm going to bring you up real quick. Frankie, what's up, man? Hey.
What a wild 5 days, I'll tell you.
Dude, I don't think it's over, man. I'm just gonna say that. I don't think it's over. This is the most bullish week of the year. Welcome, if you didn't know. Yeah, this is the one that you don't really want to short for sure. Not yet. If you're thinking that, yeah, don't fight this. You're early. Just give it a bit. Give it like a month, and then check back in August.
Right, exactly.
But you never know. Man, did you see that headline on Tesla?
Yeah, unbelievable.
Yeah, it's shalom. CC's in the house. Yeah, looking like it's been like my thesis for a while about this licensing of FSD. I heard on the Squawker something about licensing to Buick. Dude, game changer. And I don't think that. I mean, clearly the market does not care. It gives zero about how many Tesla's actually delivering. That's for sure. But anyways, welcome if you guys are new. What we do here every Monday, we kind of like go through what was the major market catalyst of the week last week. What do we have to look forward to this coming week? Somehow I have like dictation on my phone and it's like trying to type what I'm saying. What are the main things that I'm watching at least this week? Frankie, if you have any stuff, then feel free to list some names later on. But let's get to it, right? So right now, what we're doing, it's mega cap melt up week. That's just how it is, right? I got my cowboy hat on, so giddy up. Here we go. I think it's time. I still feel like we are in every dip gets bought kind of situation. Yeah, live on edge. We are going to go over Amazon. I like Amazon. What we're looking for, and we talked about it last week, is that we're looking for that first day open over 200 and close over 200, and we should be off to the races. We are really close to opening over 200 today. It's probably the closest one that we've had, but my gut says that we close over 200. And I'm not leaving. But yeah, Prime Day annual trade coming in hot July 16th. So, maybe we're a little early, maybe not. We'll see. But yeah, of the mega caps, this is one of the laggards for sure. I think it's Amazon's time. So, that said, Apple's already did it. Metals. Ooh, okay. Yeah, we can go over metals. I think this is going to be an interesting one. We're in a situation where I actually do I've liked the metals all year. Don't get me wrong, but the correlation we talked about previously, the correlation of gold to the dollar had kind of fallen off. Well, it's back, baby. It's back. So dollar going down, gold going up. I think that trend. I think just stay close to that. Definitely stay close to that. So moving forward. So last week we had a couple economic data points. We had jolts coming in last week. Consensus numbers are in the parentheses. Consensus meaning what was priced into the market. So the markets don't move, by the way, on how different something comes in versus what it was before. That's not how it works. The market only moves on how far something comes in away from consensus. So consensus is, if you're reading this, and this applies to earnings, and we're going to get into earnings here. Ooh, I forgot to grab the calendar. Let's see if they have earnings on deck. I think it's bank season coming in hot pretty soon. But the markets only move, not much, based on how far away something is from actual consensus. They really don't care, and that's how it's going to be for earnings. That's what I was trying to say. Sorry. So if the consensus is a big beat and top and bottom line beat, and the top and bottom line comes in with a beat, but that was consensus and it's basically at consensus, expect a sell-off. That's how the market works, right? Because that means consensus is what was already priced in. The only way things go higher is if something is better than what the consensus was, and better for the job market, if that makes sense. So job opening 8.1 coming in better than consensus. That's for your growth, right? Job quits just about in line, 3.459 milli against a consensus of 3.5. And then ISM services. So remember, we're a services-driven economy. This one actually was a little bit weak. Consensus 54.6 coming in at 48.8. Non-farm payrolls. This is the biggest one of the month, right? We can go over this just a little bit, but we're gonna go back to last week. Gonna take a look at last Friday's high and low from when the market received this data. And remember, I said more often than not, majority of the time, this day, this first Friday of the month, every month is going to set the high or the low for this month. And my bet is that the lows are in. So we'll see, right? But we'll show you exactly where that is and when to think about chopping or how just to continue on with the trend. Of the non-farm payrolls coming in at 206,000 jobs, new jobs taken versus a consensus of 190K. The reason this is so important, by the way, from a market perspective, is the market reads this as the consumer has more money, right? So if the consumers are getting more jobs, there's more money out there to spend. And that's like flows into GDP, etc. Where these numbers are coming from, private payrolls. Did I get this right? Oh. Private payrolls, I have this written as 136. It might have been flip-flopped there. Government payrolls, this is good. Government payrolls, 70K versus 25K prior. This is a little bit inflated, probably because of the elections. And manufacturing, negative down 8K versus 0 prior. Unemployment rate, weird, right? So unemployment rate ticks up while we increase jobs. Funkiness going on. But net, this is looking pretty solid. I think a couple headlines. Frankie, were there any headlines that stuck out for you last week or maybe this morning?
No, I mean, nothing. I mean, it's just been like, let's put it this way, no bad news. You know what I mean?
Yeah.
Everything's been solid and the Mag 7 have been ripping. We just had a little pullback here that I bought or I'm buying.
Nice.
Yeah.
I got a quote. Audio's bad. Let me know if this is better. Is this better?
Yeah, I can see the recap.
Music in the background for you. Yeah, I just lowered it. Okay, cool. All right, I think we're good. So I think, some funkiness, home affordability. We got the 30-year mortgage rate actually coming in a little bit hotter. Affordability sinks to the lowest since 2007. I mean, I live in Silicon Valley. It's absolutely horrendous. It's no fun. Home ownership is out of reach for pretty much the majority of people here. It's unfortunate, but it is what it is. Boeing, biggest headline of the morning. I think this was midnight last night. Weird timing. Agrees to plead guilty of a felony charge of conspiring to defraud the federal government. This one, a little bit mixed headlines. What I'll say is it was like a 230 something million additional fine on top of their prior 230 something million, putting it at about 450-ish milli of just fines. And then there was another 455 million that they're forced to pay into improving their controls. So what I'll say about this is you could watch it. Look, I'm not really into trading Boeing right now off of this kind of headlines. It's not, doesn't make me feel good about it. But if you're in the stock, what I'll say is, the market likes certainty and it hates uncertainty. So this not being hung over the head of Boeing, not knowing if the fines are going to be bigger, it's probably a little bit of relief for Boeing. I don't even know if I looked at it this morning because I was so Like, I'm not into it. um, oh yeah, nice little pop, and then fades are back, right? So I don't know. Once Calhoun's out of there, then I'll maybe think about Boeing, but I don't know. I know Emp is all over. Oh, as long as I. Too much risk for me.
Yeah.
It's just too much risk for me.
There's so many other things, right?
Yeah, there's so many other things out there that are much, but like, hello, Amazon, or Amazon coming, Tesla,
Yeah.
Apple, what a run. Insane. And then what is this saying? Democratic. Oh, this is the Biden shenanigans. So crypto got a big dip last night, which we bought a little bit. I told our group, look, I'm like this on crypto. I'm putting this at a 50% probability that was the low, but it had an 80% probability of getting bought and being a nice little bounce. That's what I said in our chat. I think that pretty much played out. We still have this Mount Gox liquidation that is looming. So they've released about a third of the coins that I believe they're planning to. So there could be more of this in the future. Look, if you really want to dip by Bitcoin, the lowest I could possibly see this going is like 42s, maybe. And that would be like, okay, good. My main, like, pick up some stuff, for a trade is like 52.5. But anything as close to 50K as you can, I think that's good to go. Marvin, what is ADR? Ooh, so this must be a new member of our actual group. So what ADR is, average daily range. That's how we know when something's kind of peaking out for the day. It's also a reading for volatility itself. And here I'll show you. So just really quick. So there's green and red lines on my chart. This green line is upper daily range. It's literally ADR, average daily range. This is how much Tesla moves in an average 24-hour or average session. If it starts to extend that, when these start to move like this is actual visual, a visual of volatility expanding on options contracts. So as an option trader, you actually, price actions literally half the battle. You have to be more tuned to volatility than you are price action. And this is how we know, one of the ways that we know that your contracts, if you're in an options trade, are peaking, and it's probably out price or the premiums of your options could be outpacing the price action. And that is probably the one of the number one reasons to sell an option, is when your premium performance of the option contract is outpacing price action of the underlying stock. Yeah, you want to take advantage of that. All right, so then we have I think it's Henry Hawkins. Do you know if it's Henry Hawkins this week, Frankie?
Yeah, Henry Hawkins Tuesday, tomorrow, and Wednesday.
So if you don't know what Henry Hawkins is, then you're not old school enough to know, but we are. So you got our experience at your back. Anyways, though, it's a 2-day testimony, right? So Powell goes in front of Congress and then in front of the House of Representatives. Honestly, it's a big nothing burger. I would not even worry about it. But since it's there, I know people might be worried about it. Don't. It's not a thing. It's not going to move the markets. What happens is that the politicians take their time in front of the monitors to talk about whatever initiatives they're working on and what agendas they want to drive, right? Remember, it's election season. There's going to be a lot of nonsense about, who knows what, right? I can't even begin, but it's not really going to be supermarket moving. They might try and bash on Powell a little bit, but look, I would not worry about this at all. So that said, where are we? This is just a quick seasonality check, right? Why do I keep saying it's not a little early for the shorts? Look, this is a presidential cycle, 4-year presidential cycle. Year 4 of the presidential cycle is one of the better ones. Year 3 is the best. Year 4, second best. We are here, literally right here. And, if you don't believe in seasonality or these kind of trends, look, overlay this over the last 4 years in the S&P 500 or whatever, it's going to match it almost perfectly. So that said, the technicals support the seasonal trends. That's what we have to see, because, it doesn't always work out, but this is an edge that we can add. If the technicals support this storyline, which they do right now, stay the course, right? So here's what we have on deck for this week. Today we get consumer credit change. Might be coming out as we speak. Might have come out already. Let me just see. Not yet. So we got consumer credit change just about an hour before the close. So that could make a back half move, like a power hour move possible. That's probably a decent market mover. Powell testimony again, and then we have a 3-year note auction. Powell speech on Wednesday with a 10-year note auction. The reason I have these bond auctions up here is because yes, the market is still all about the rate story, not so much inflation, but when, and when does the Fed stop printing, right? Like this is every time they have a bond auction, it's like they're increasing their credit card limits, if that makes sense. That's what's happening, right? And so, as you know, every time this goes down, they're basically getting the credit limit increase, and it's like, oh, okay, what are they going to spend on now? So honestly, we want to see that start to slow. Buggers in here. What's up, que pasa? Frank. Yeah. And then, the real fireworks kick off Thursday. So in anticipation to Thursday, I think maybe this 10-year note might be that midweek pivot auction. I would actually venture to say most likely. So this setup in terms of economic data kind of sets up for like a lullish Monday, Tuesday, and then probably front running. So the market likes to front run a lot of things, right? We got PCE already. Inflation is looking like it's dropping like a rock to me. I was just listening to Hedge Eye not too long ago. They're like total opposite. I'm like, you know what? We can look at this, but this is CPI is consumer. Jesus, purchase index. Good night. Why am I having a
consumer price index?
It's basically
the rate story is where you're going to get your interest.
Yeah.
I think for the long
This
side.
is the actual inflation. So the market loves CPI day for whatever reason. The market moves significantly when we get these CPI numbers. I will tell you guys of the 3 major data points from an economic perspective that you get every month: non-farm payrolls, CPI, and PPI, and then PCE. So 4. CPI is the most lagging of all of those by far. So I really don't care about CPI, but the market does. So just know that however this comes in, if it comes in too hot, we'll probably sell off. If it comes in, what does too hot mean for the noobs, for the newcomers, whatever. Sorry. So right now, consensus at 0.2. This is the actual inflation rate, and forecast at 0.2. So if it comes in at 0.3 month over month, we're probably going to sell off. If it comes in 0 or 1, we're going to rip faces. That's what I can say. We're going to lose a 0.195. So honestly, I don't expect the annual to change a whole lot because we're losing that. So the year over year is probably going to be static. It would have to come in. The month over month would have to come in below 0.195 to change the annual. And if it comes in at like a 0, this is what you start looking at. We're going to drop all of these numbers off. So 1, 2, 3. Once we get into September numbers, and then here's this, 3.9. A year from now, we're not going to be looking at 3% inflation. Like it's just not happening. But anyways, that's what I'm looking at. And so that's CPI, PPI month over month. That's producer price index. So if CPI is what the actual consumer inflation rate is, PPI is what the producer inflation rate is, which means producer is, let's say Tesla. How much inflation is Tesla incurring? And then the question becomes, do they pass it on to the consumer? That a lot of times they don't actually, but this is more of a leading indicator than CPI because you can kind of infer, okay, will they pass this on to the consumer? Like if this is like what was that? There are a lot of people on like the cocoa trade and like, oh, we want to go long Hershey's, but it never worked because Hershey's didn't pass on the inflation that they were incurring. So they never saw increased margins. So that brings us to earnings. So last quarter is done. It's not this week, it's next week. So what's important to know is that markets tend to make tend to make this pre-earnings run 2 to 3 weeks ahead of time. That's why this really started to kick off last week, this bull run. And as we get closer, you can look at your whatever stock you want to trade. If it's about 2 to 3 weeks from now that they're going to report earnings, that's when I would start to expect you have this pre-earnings run. So just a quick recap. Q4, so 2 quarters ago, was literally our best print. So this is 1, 2, 3, 4, a little over 2 years, 2 years of data. 1, 2, 3, 4, 1, 2, 3. Almost 2 years. Almost 2 years of historical data here. 29 last quarter. 29 companies beat, 1 company met. That was the best quarter I've ever recorded from an earnings perspective. Last quarter, still very good. Not as good as the quarter before. 28 companies beat, 2 miss. This is of the Dow 30. So I track this for the Dow 30 components. But I think that's more or less it. Let me see. I was going to grab this. Unfortunately, I don't have it. I'll just grab this from Twitter. So earnings whisperer, looks like we have, what do we have? Really nothing. So banks kick off on Friday. So banks officially kick off earnings season. JP Morgan, Wells Fargo, Citi. So Friday would be the official kickoff. So we got Delta on Thursday. That's going to be interesting. And really nothing until then. I mean, I guess you could do WD-40. That chart actually looks like really bullish. Side note. But anyways, yeah, that's ConAgra brands, the Pepsi. So we got some staples, consumer staples on Thursday, and then banks really kick us off on Friday. And then from there, we get hot and heavy. And then earnings season really kicks off. But that's most of what I have on deck for right now in terms of headlines and catalysts. Unless, Frank, did you have anything that I missed that you want to go over?
No, I think that the inflation numbers that come out this week, you shouldn't really fear them. I think that it's just an opportunity probably to buy, right? If the market drops on those numbers, you know what I mean? And
like if the market
you have
drops.
to watch, let it drop, and then we'll get back into this rally phase again. I mean, it's just even every single dip, like even little dip, is being bought. So like there's kind of like a feeling, a gut momentum to it. It took me a couple days to get on board. Yeah. But like, I'm long right now. I bought this crap out of this dip. And it's for me, like, 10 points on, it's like 10, 20 points on a couple hundred contracts is like ridiculous. So, and I'm so comfortable buying it, you know what I mean? Because it just ripped right back up. Yeah. So, and so, like in a regular sideways market, buying the dip has been the trend for years. But like, I call it catching the knife. But in weeks like this, it's you have strong momentum. They're just buying opportunities. So you can get ripped up if they extend a little further than you think. But I'm comfortable like looking for like them to sell off a little bit, these little pullbacks, make a little like higher low, and then you're in, and you're in for a ride for like a lot of points. I mean, Tesla's never looked back. I mean, if you're not in Tesla, like
it really didn't
trade, right?
Yeah,
you've missed it. I mean, and that's okay. You're going to. If this is how many times in your lifetime are you going to see Tesla go 70 points in 5 days? I mean,
it's happened once before.
Well, yeah, I mean, it happens, but like once or twice before. I mean, it's something that's just, I mean, and you called it. I mean, it's been unbelievable. It's been terrific.
No, it was a good one. Here's what I'll do. So really quick. So last Friday, if you don't have this already, mark the charts. So mark your high and low on the charts from last Friday for SPY, Qs, diamonds, and RTY or IWM. On my low for July on a philo, I took the pre-market low. So the minute that the market actually receives the data, it's right here. So I have 551 even. So to me, so remember, this is where this is the range, right? So right now we opened above, but we're right back in. So really, what we're looking for from an index perspective, we're likely just going to chop sideways. So this would bring it back to like maybe 552 at most. But look, as long as we're holding 551, the trend is upside, right? And that's where it is. In terms of if we get a daily open and close over 555, it's just off to the races, and we are absolutely trending higher. So this little range right here for right now, for the rest of this month, right? This is your range. Inside this range, expect somewhat of a chop scenario. But at the same time, it's like, if we start trading out of this box, you're just gone, and we continue on to the upside. For right now, this orange box here, this is an average weekly range. So let's say that SPY does come back, does a 50% retrace of that swing low to this morning's open. This actually retest that prior all-time high. Oh, where is this? Oh, maybe I have this marked wrong. Do I have this marked wrong? Yeah, I do. So this is prior all-time high. I don't think we get that low. Definitely don't get that low. But let me take this off. This is just definitely the wrong line. Let's say we do retrace, let's say 50%, and kind of pivot into this 553-ish level. An upside target to me, legitimately, after this kind of extension. So I say extension. So we're looking at this consolidation in here. That's the last consolidation breakout, right? We are looking for this to extend to right here, 563. And what's funny how this works, this orange box, this is an average week's range. So my upside target on SPY for this week, 563 spot 17. That's where I think you could start tagging and really looking for dip buys in this kind of general area, probably today / tomorrow. What I got like 553, almost even, ideally. But yeah, right now you're right in what we call like that golden, what the traders call that golden pocket, right in here of a nice retrace. So that's SPY. Q is very similar, probably a little bit more bullish. So orange box here, average week's range. If I did the same, this is going to put us about 504 on SPY on the Qs, which was actually my upside target from that initial break, which I think we talked about on Spaces. It was like I grabbed these 590 calls or 490 calls and upside target like 503, 504. So I just marking myself. So this is literally just how I'm doing it. So sync globally, and that's your NFP high. And again, it's this extension. You call it this extension if you want, which puts you just over 503. God, I guess it could be 510, but an average week's range, let's call it an average week's range is going to be up to 506. I think that's I wouldn't push it much more than that right now. Cool. Do we need to look at IWM? I'm going to skip over diamonds. They're a little bit weaker right now. They're still in the consolidation. So if they break, they break. I think we're overlap. We have some overlap on some NFP levels here. And then IWM. This is yesterday. So this becomes the NFP low for IWM. 199, just slightly under 200. And this becomes the NFP high here. Right there. Cool. And then I did want to do one thing. So this is the dollar. So we talked about the dollar just a little bit and gold. So this is what we were looking at on the dollar. This is, I believe, going to be pretty important. We're below that 50-day now. It can get a little choppy, but as long as this is starting to trend down, I think this is going to be good for gold specifically. Ethereum and Bitcoin, like I said, we got those sell-offs. I don't know if it's the actual low. Not looking great right now. But if there's more liquidation of this Mt. Gox situation and crypto goes down a little bit, I actually, with the dollar falling, I think that's probably like best case scenario for gold. I'm just going to look at gold futures really quick. Still in some heavy consolidation, quite frankly. So not out of the box yet. This guy needs to get over 2,400 an ounce for gold to actually be in breakout mode. But for right now, holding over its 20 and 50, this is actually constructive. So consolidation, not broken yet. Can we get a love off of this or some kind of trend? Ooh, oh, this might look really good, Frankie. Do you trade gold?
I have not traded gold. No.
This is actually looking really interesting. So someone asked about not sound as bad. Oh, that might be on Frankie's end. I hear a little background noise. So this is interesting. So we have a little bit of a downtrend on gold. You have a breakout right up here, which we know is not typically the big long trade. The big long trade is if you come back, retest this broken downtrend and bounce. That is the big long trade. So I'm going to be looking for this real soon on gold. You can trade this multiple different ways. If you are a futures trader, GC is the contract. GOLD. I'm sorry, GLD, not GLD, GOLD. GLD is the ETF that tracks gold. And I guess you could do it through some miners, right? So GDX is the mining complex. Yeah, I mean, that was a clean breakout for sure. Also, these could pull back significantly and still be very viable to me. Let's see where that would land us. So that's going to land us, yeah, right around that around that 50-day 34.50, if that, and retest this kind of accumulation here. But this looks like it's setting up pretty nice, actually. So if we get a couple pops on the dollars, this is probably going to be a Thursday, Friday trade also. So this is going to be major on that economic data. But I think, yeah, I'm pretty sure that I have Miss Cleo in the background. So let me hold tight 1 second and see what she's got for us. So if you don't know, we got a buddy of ours, Miss Cleo. We call her Miss Cleo. She's actually dude, Mr. Cleo. We'll call him Mr. Cleo. He's a comedic relief, whatever, but wildly accurate sometimes. So let's get to it. All right, guys. Now it's time for some of your favorite segment of the week. So he gives us a tarot reading. This is crazy. So top card is what we call like the theme card, and then underneath you got Monday, Tuesday, Wednesday, Thursday, Friday. So the tarot reading for the market, I don't really know what some of these. The sun is usually good. The tower is probably I remember that. So the tower is like one of the most bullish cards of the deck. This is Thursday. Holy moly. Let's see what she does. So they're going to give us a quick reading on what the theme card is. So how well does this? Another swords theme card, and it continues the series. It's been running for 3 weeks. Now we got 5, 7, 10 knight, and that makes it fairly simple to judge this week. We'll see some more of the same. We'll see more of the same with more energy. So she's calling for more upside than we've had in the past. Wild. Knights are hard chargers and they start strong. So expect more energy to start the week than to finish it. Okay. So let's get into the day. So today is Monday. Let's see how she did so far. So the sun, you've heard it before, but I'll say it again. The sun has two purposes. It arrives during times of euphoria to knock us and our egos down a peg. Okay. It arrives during a downtrend to burn. There's no downtrend. Seeing that we've been up only for a period of weeks, this could be a retracement day. I guess we started off a little slow. Yeah. Started off a little slow. And the only exception would be a big gap down. Sun could arrive to fix that. Otherwise, don't chase rallies. Okay, fine. Tuesday, tomorrow, is the Two of Cups. I said we'd have big energy to start the week, but Tuesday doesn't seem to follow suit. The Two of Cups is low energy card. So this is Powell's testimony one. Brings boring price action often in the form of a slow grind lower. Okay, look for rallies to be capped and sold here. Dips likely be supported. So dips be supported Tuesday. That's tomorrow. For the most part, I wouldn't. Yeah, she's not a trader. She's a tarot person. Wednesday is justice, major arcana, and therefore big energy. Wednesdays tend to be pivots, and this card is usually quite bullish. So Wednesday, she's calling the kickoff. So if you've been weak to start the week, then there's a good chance this card gives us a needed boost. I looked through the historical data, and I don't think this card has ever brought red days for stock. Never had a red Wednesday. Okay, so if we show strength early, follow it. So she's calling Wednesday trend day. We've been cruising higher on Monday and Tuesday, then maybe this says be cautious. Otherwise, there's a high chance of green. Thursday is the tower. So this was the one I remember for sure. A big energy card. This one can be good and bad. This is the bad is the tower gets built on a poor foundation and eventually must fall. The good news is that it can often bring a rally first. This one has actually brought some really strong squeezes, but I'm not chasing when this card is present. If Wednesday is strong to the upside, then this card could retrace it a bit. This is like she's a day ahead. If we see early strength expected to try and sell off throughout the day, so sell Thursday, CPI. If we see early weakness, that is a sign that the tower is collapsing. We should not try to stop it. So short version is that you can make quick cash if you're agile, but don't get too comfortable if weakness is present. And hold off on the dip buy. Friday is the Empress. We close the week on yet more major arcana. This is looking like a wild week. This one is a consolidation card that tells us something is building and brewing. It usually brings chop as we digest a larger move, and it does tell us a new setup is coming soon. But today is not the day to expect it. So seems like a good day to survive the next entry and watch as it calls. Basically, she's saying Tuesday through Thursday morning. That's what I hear. Tuesday through Thursday morning. I can get with that. That makes sense from what we have on the calendar. Recap, some weak and worrying energy to start, but it's all big energy from Wednesday forward. Expect a pivot Wednesday with some trend on Thursday and chop on Friday. That's it for now. All right, Frank, I took your video down because it looks like you're getting a little shaky over there. So what I'm going to do right now, and I'll just exit this, I'm going to pull up a couple different charts. So let's see. If you guys have tickers that you want to take a look at, by all means, shoot them in the chat. All right, Spider's in the house. What's up, man? And again, what I'll say is it's always multiple time frame first. Oh, this was SMCI. This was a big kind of gap first. But I said I'd look at a couple things. I'm going to give this to you until I see some tickers pop in the chat. If you guys, again, have them, we could talk about them. But Amazon right here, right now. So Amazon is really interesting. I'm going to look at a 3-hour really quick. And so what I'll say is that this is the pattern that I'm looking at right now. So we're kind of like wedging out on Amazon. Initially, strong open, coming back to pop in here. I think this is probably a dip to be bought. This is still setting up. I think this is probably later on in the week. For right now, I'm a hold all this for sure. Here didn't pop out, so it could pull back a little bit, but I think honestly, whenever you see this stuff, actually, let's get a bigger trend here. I'm gonna take this kind of like prevailing trend line channel. So the last couple of weeks. So right around here, usually if this is a channel up, usually the best times to actually grab some of these are if you have dips towards the bottom of these channel ranges. So quite frankly, actually this right about right here, right now, I'm getting really interested on actually opening something as we speak. Sorry. So, so I'm looking at this on, I'll go ahead and move it to a 30 really quick. So right here, we have a breakout, but a failed breakout here, trying, cracks through with strength, little bit of a stutter step here, and we're basically coming in to retest it. So right in here, it could go a slightly lower, maybe even like 197s. Right here. Any lower, like right in this area, 198.29 to 197. I think I'm going to be looking for a bounce on Amazon. This is like ASAP. Super interesting. We're coming in hot to this. So what I'm going to be looking for, sorry, because this is actually setting up right now. I need to look for like a 2 to 3 candlestick setup on a smaller time frame. So I'm dropping down to a 3. What I want to see, I'm seeing this flatten out right here, right now. I want to start to see some kind of like sideways action. And then later on in the day, a candle open above whatever this midday consolidation is, like this. So if this midday consolidation is right here, then I want to see a candle like this open. Hopefully you guys can see this a little bit better. Right here. Does it make sense? So we'll wait for this to consolidate, see where it goes. If for whatever reason I get a down candle, then I don't take any trade until it's well inside this range, and then I look for that same kind of setup. But for right now, this is a setup happening as we speak. Honestly, it looks like a good spot to take a shot, but I got to wait for a trigger. So that's what a trigger looks like if you're not familiar with trading. So we get levels of interest. Doesn't mean that we take a shot immediately just because something gets to a certain spot. We want to wait for the setup and then the trigger. So the trigger would be like intraday, even like a 30-minute candle, right? So down, flat, so inside candle, and then directional upside. All right, we can look at, Tesla. Let's do Tesla. Tesla is wild. So I had 260 on my Tesla chart. Where is it? Here. Just under 260. 259 and change coming from this order block right here. And we got there. So I think today's headline really interesting, or at least rumor. We're going to call this, we call this like a fair value gap, 263.45. So if Tesla closes over 263.45, I think it's a done deal. And she goes higher. But what do you guys care about? You want to know, where does she go to? And I should too. So what I'm going to do really quick is I'm going to take 2 measurements, one of this most recent swing low, swing high that we're dealing with. Oh yeah. We opened up over the 6.5. So that's completed. Let me go ahead and take the whole one, the whole thing. Let's grab this on a daily. The whole kit and caboodle. What is this, 400 and change? And I'm not going to take this low. I'm going to take the actual low since we're going from the actual high. Come on, stick. Ooh, interesting. Okay, so here's where we land. So this is going to be my most, I like this situation the best. So we had 230 as the first target, then we had 260 as second. We are at second targets. What this is and why this is interesting, from this 52-week high to this 52-week low, this is smack dab right in the middle. So I think this is actually really important. Here's how this works. So in the middle, in terms of Fibonacci retracements, I think number one, a good bull needs to know where the bears are going to show up. 260 happens to match up with the first level that the bears would show up. But the unknown fact about this is that if you extend beyond a 50% retracement, the probability of getting to a 618, and for my crew 65 retracement, is well over 60%. So that's where we're getting really interesting here. So I said 263. I'm going to hold it at 263. But if you get a close, daily close over 260, and if you want to be cautious about it, call it 263. The probability of Tesla going to 300 is very high. Very, very high. Believe it or not. And that's what it is. It is what it is. From a statistical perspective, the probability of Tesla going to 300 with the daily close over 260, maybe 263, well over 60%. That's what these stats give you. That's going to put you right into this overhead supply. And it's going to bring us right into this next fair value gap, which is 305.58. There it is in all her glory, folks. 305.58. That is your next target for Tesla. Quite frankly, I think she gets there. I think she gets there. Yeah, we have a session gap 289 that could easily get sucked up into that. But before we get, over our skis, you have to see it close over 260, 263 to be safe, and then you need to see the next day opening above that. Is that Ava? I wonder if that's Ava. It looks like it might be Ava. Cool. What do you think? Keep it. I'm telling my friends. Oh, nice. Yeah. All right. So, all right. That's Tesla. I would be bullish. Here's where it stops is if you break below today's low, that's 245. Then it's probable that we kind of come back and retest some of this downtrend. But in all honesty, this is now. I mean, geez, guys, what a stock! What a freaking stock! Let's do it this way. So we're gonna have to now take this trend line since the others are pretty much gone, and tag this right there to get a lot of confluence. I mean, the downtrend is broken. That's for sure. So more or less like all dips skip bot, but she could drop back down to the 200 week simple moving average, which is that purple line. I don't see that happening right now. And then there was one order block right in here. So this area here. So I'd be looking, that's about 240, right? So 240 dip buys. If you see it, maybe. I don't know that we get there. Hopefully we don't. Below 245, yeah, we definitely go there. But this is going to be right in here. Boom. 240, spot 70. This is, look, dip. If you didn't know, by the way, too, this downtrend line, if you drop in on a very smaller time frame, look at this. This is a 15-minute, this white diagonal line. We just saw where that came from. Look how fast Tesla retested this over here. Oh, it's just barely breakthrough. There was another one. Oh, it was this guy. There was a blip in the radar, like super tiny blip. And I was like, what? Oh yeah, there it is. It was this one. We just got barely a little dink, Nick. I mean, look, it's weird. Like if you were building a position in Tesla down here, do you think you're selling right now? Not really. Maybe a little bit of trimming, but you're not really selling. You're pretty much just getting started on your ride. So, and if anybody missed it, they're probably like, okay, we'll get this dip bot. All right, rookie engineer asking for Disney, the mouse, House of the Mouse. Okay, so here's we are on Disney. So right now she's not going up. Don't worry. I don't know that she's going down either, but here's the deal. So on our end, from a long-term perspective, hopefully, if you're looking at Disney, this better be long-term. Once we broke out of this 80-ish level, we had a 120. I had a 120-ish target for Disney. We got there. So now what do you do, right? So you got to the target, achieved. Now we're starting to pull back, and we're pulling back into this one more time, golden pocket. So this is a measurement, swing low, swing high. 52-week low, 52-week high. Inside the box, sorry, my voice is cracking. Inside this box is that golden pocket, which is technically right here. But remember what I just said in regards to Tesla. If you break 50% retracement, so that 50% retracement of that 80 something low, so just about $80, 78 and change to 123.90 high. 50% is 101.52. If you break that 50% mark, the probability of you going to a 618 or 65 retracement is extremely high, and that's exactly what we're seeing right now. So for Disney, where that puts this is actually right into this box here. So that's in between 96 and 94.75 to be overly precise. And that actually is a perfect retest of this prior breakout. We've filled this gap right here. And so I have on my charts, we have something called BOS or break of structure. So the retest of that last break of structure is right in here. I think this is here's what I'd say about Disney. It's a buyable dip, but just because, remember I said earlier, when something gets to your target, it doesn't mean that you just buy it, right? You have to have a trigger. You have to have something that tells you, okay, now it's time to go back up. Because what I'm seeing here is that this is pretty much done going down, but it could be a long process that kind of like chops. Remember, we say markets are either running or resting. And so this process of resting, now that it's had a run to the downside, could be like a month, right? And it could most likely become an earnings event based on the timing of this setup. But you have a dividend that you have an ex div date of today. So that's usually a little bit of a dip. And then after the ex div date, you'll start to see a little bit of a rebound. So we were really close. I'd say close enough for government work. I think this is fine to start taking shots, but I would not expect the Mickey Mouse Club doesn't air for a little while. Does that make sense? So like, just because it might be done going down doesn't mean it's ready to go up either. So that's where I am on Disney. This is more of a sell puts kind of setup. Okay, next one, AMD. AMD, super interesting, super interesting. We're at first target here. We're looking 184.92. That's right into this upside. So this is peak to peak right here. We need to see from here 177 close above. And then from there, we definitively get right back into this area. This is a breakout in action as we speak. So it's made a big move. Market ran. It can rest. Again, it's another stock that's been kind of dormant for a little while. What we're going to do is we're going to take this top right here. That's 175.49 of that last high. So as long as it defends this high, oh, look at this. And this goes all the way across. This is a big deal. As long as AMD is defending 175, I think you're good. But if you get a day or two close below, and this looks like it's extending right now. We'll go yesterday's high right here at 174. This looks like it's going higher. I'll just say that. You're here, but it could chop around. So give this like a day or two. But if you start seeing the lows of a ticker hit in the morning and that same stock closes on the highs, that's how you know you start to have a trend, right? In terms of like SPY and Qs, if we're closing on the lows, well, look, it's maybe not that time. Give it a little bit of a breather. Don't go jumping in, right? If we're closing on the lows, what we want to see is the lows made in the first hour or two of trade. And so right now, I live on West Coast, right? So 6:56 a.m. This is the lows before lunch. So if this is the lows of the day and we close towards the highs, that's a bullish sign for AMD. So this one looks good to me. Upside targets just over 180, so call it 184 for a pretty solid retrace. And we're just doing same kind of measured move: 52-week high, 52-week low, 50% of this range, 180, 185, just under 185, and it lands us right into here. This one I wouldn't expect a whole lot more. Quite frankly, you can't really think about going higher until you're holding that 50% retracement, right? So if we get to 185 and we have a couple closes above 185, then yes, we go close to 200, probably just underneath 200. That's where AMD goes. There's a lot of good stuff fundamentally from this in terms of like the endpoint. I say endpoint client refresh, like laptops, desktop. That's their play. Then I don't see them as a data center play. I come from the data center space. They're just not, but the market thinks they are. So maybe that storyline can push it up there. But just no, that's just actually not. All right. Butt bucker. Wait. BB. Do you mean what I think you mean, BlackBerry? Oh God. Okay, so a cheap stock, you can't look at anything other than the daily. Sorry, man. I can't get with it. I can't do it. I can't do it. Captain, she's got to be closing at least over 250. Is she closing over 250? Cool. In between now and then, is it possible? Look, it's real possible she closes over 250. You have to see that happen. She's defending here. It looks decent. It looks decent. So high, equal highs. Ooh, your equal highs. You're pretty much equals. So I don't have a break of structure. So if this high was over that high, then I would say break of structure. But we're not quite there. And you got some overhead. Major overhead resistance. But that's the 50-day. So if this holds, and then she bounces, man, you got me looking at this thing. Is this really what you're looking at? Oh, God. All right, I can't do it anymore. Cannot do it anymore. Hood. All right. Oh, wait. You guys are asking on NVIDIA. Okay. So I think NVIDIA is an important stock. NVIDIA has been in a very tight consolidation. We know that Jensen sold 1.3 million shares. There's a lot of shares to sell. And we're holding the 20-day. This white line is the 20-day simple moving average. There was a little bit of a downtrend. That's broken now, right? So, but again, remember, if a downtrend's broken, doesn't mean it's ready to go up. This looks like it's getting ready. We need to see some renewed interest. If the Qs are going to do what they seasonally do, they're not going to do it without NVIDIA. So I do like the shots on NVIDIA here. I do have some shots on NVIDIA here. As long as it's holding over its 20-day simple moving average, this is possibly a pretty big catch-up trade. And so we can see like this breakdown here, this level right here. That's what I'm looking at. There we go. There it is. So we're holding this zone of interest, let's say. So for now, I don't want to see any lows lower than 126.50. I want to see the lows made in the morning. I don't want to see us close towards the highs. Right now, this high was made this morning. So by the end of the day, NVIDIA has got to get her acting gear. If it closes on the lows, still, basically we're chopping, right? So peak to peak. I can't see this fall below 126.50. I just don't want to see that. Then we go full blown back to retest this 123s again. But I think overall, depending on your time horizon, this is chopping to the upside. And I think, in short order, maybe this week, if this does plan out, even if it closes on the lows today, but then closes on the highs tomorrow, I think we see 138, give or take, near term. True story. And we fill in this volume pocket that we created this day. So Q's already did this. SPY's already done this. I think that NVIDIA is next to do this. That's what I think. Now that Jensen's selling is over. Oh, you guys, you got a bunch of them here. Oh man. All right, Hood. We can do 2220. Yeah, I like Hood. I gotta ask a minute when they're gonna release this next round of data points. So I think that's gonna be the catalyst. So we have to have that next release of Robinhood numbers come out. That's gonna be a big deal. 24-ish is a big level. This was my last extension from this consolidation. So I'm going to go back to a larger time frame. So here from this consolidation low to high, I had that first extension 23.39. I really need to see it closing over 23.39, 23.40 to go. And I have my targets 28, 29. That's how it is. As long as it's holding the 20-day, that's fine. The only thing that's concerning me from a technical perspective is that the distance between the 20 and the 50 is starting to kind of consolidate, which means a little bit more chop. That's my biggest concern here. So I think it's worth a shot, but not a big shot. Not yet. Not until I have what is that catalyst date? Then it's going to be a little bit easier. Miguel's asking for Meta. I haven't looked at this. All right. So in our group, sorry for all the lines. If you're not familiar with this stuff, this is all technical, schmectical stuff. So prior all-time high, 531.45. I was looking for this to retest today and hold. This one is a big power move up. So the shots taken from me we're down here. So remember, what was it that we are just talking about? I forgot what stock. I don't remember, but we're talking about this channel, right? So take the big shot at the low, Amazon, at the lows of the channel. That's what Amazon's looking at like right now. And then you get this big pop up to the top of the channel. So for me, my upside target really on Meta is 550 and change. I saw a lot of volume coming in on the 550 calls for this week. You know, as long as we're holding 528, I think that this stays in play. This 532 level, that prior all-time high, I think is what I wanted to see at least close over, ideally. But inside this box right here, I think you could start to look for that type of trigger. I'm probably stopped out. I'm probably at the lows of the day. For now, we'll see. So for now, I cannot go below 529.32 on like a larger time frame, because we do have a pretty large volume pocket to fill down to that 523.50 level. So that could be a decent dip to buy from this break. Yeah, that's almost exactly there. So might be a tomorrow thing, or maybe this afternoon. We'll see. But that's the level. We'll call this a level of interest, and that's the retest right here. Here. Super important. Why is this beeping at me? I don't know what's beeping at me. All good. Oh, you guys, I got so many. I'm just going to start blowing through them. I won't go super in depth because we're running out of time. CCL, what the shnikes? So we got hit by a hurricane. This is not CCL. That's CLL. CCL hit by a hurricane. Retest that break. Yeah, you're holding. So I think we did go over this with somebody recently. So hurricane hits, made landfall today. Now it's what? Now it's old news. So that's priced in. That's good. We got a retest of that prior breakout right here. Holding this level, I think as long as you're holding the 20 day, that's fine. It's not like resume breakout mode until you're over 17.99. You're not there yet. So this to me looks like consolidation until you're over that 17.99. Then you're going to get a big whoosh up like a full dollar at that point. Okay, Palo Alto. And then a couple more. Yeah. Oh man. So Pan, by the way, Palo Alto, one of the best companies in the market. I had a trade on here. This one consolidating now. Ooh, you got like a little crypto pattern. Was there news Friday or this morning? Was there news on Pan? Did I miss it? Dude, I must have. That looks like a news candle. Somebody downgraded, something like that. 3 hours ago. I'm swinging primary driven by. No. This doesn't look bearish. I have to pull up the brokerage to see. Dude, I must be missing something on Pan. That's a news candle. We call this a kill candle. Let that rest. No news, but crowd down. Yeah, this is interesting. I don't know what's going on with this. We call this a kill candle. This is important to know. It kills the momentum, whatever momentum there was. Technically, a retrace would put you at 323.50 or 323.35. So that's this line right here. I would look for that to kind of base and hold, and then possible dip buys. That's closer to the 20-day simple moving average. But again, I will say Palo Alto is one of the greatest stocks in the market. It just is. If you don't know you go, but do your own due diligence. But when I was in the enterprise, I used to sell. I was like a technologist. Like I sold a reseller. Like I sold these products to large companies. Of all of the things I've ever sold in my life, Palo Alto was by far the easiest sale I've ever had, because it just works. Like it's just that good of a product. To their detriment, I guess, it's been hard to grow because there is more or less like everywhere already. So they're having to grow a lot by acquisition at this point. But yeah, is one of the greatest stocks out there. Rivian. Oh, look, I'm surprised. Rivian is doing well. So I said, on our situation, hey, look, I'm gonna take down 80% of my options, a little bit of my equity, and I'm gonna hold 20% of my option position as is, and I sold some $20 upside August calls for Rivian. The situation for Rivian is getting better, and I just like, geez, look at Tesla FSD. What did you know Rivian has their own FSD situation? Holy moly. And they've already signed the deal with Volkswagen to like license it. Wild. So I think it's a long-term play. I think in the near term you have to look at this prior consolidation. So in my group we said 1350 is likely going to be the near-term lows. That comes from right here. And you could kind of see it. So now what I'm going to do, so 1350 is held. What I'm going to do is I'm going to take this red box and I'm bring it up to here, this consolidation low. Hopefully you guys can start to see this, and I'll drop into a different time frame. So we're looking at this base of, let's call them investors. Do they accumulate one more time in here? We're not out of the weeds until we're over 16 and change. That's whenever Rivian has gotten there and really over 18. So really over 18. And we're going to grab this guy. Boom, right there, 1855. If you see Rivian closing over 1855, yeah, take a shot, right? Because we are then making new highs and we are out of consolidation. In the interim, I do expect this 1750 to be the chop zone, meaning like chop zone in here. This red line is the 200-day simple moving average. One thing to note, when a stock's below a 200-day simple moving average and it makes a higher low, so low, higher low, higher low, underneath that, it's likely going to cross back over. But does this bounce hold? I don't know. This is a show me story. It's going to come down to earnings. I'm positive they're going to beat on revenue. I don't know what they're going to do from a margin perspective, but look, if they beat on margins, he's going to be a rocket ship. To be a rocket ship, likely to like 23s, and we're double just on equity alone. So I think the juice is still worth the squeeze. So hang on, but that's Rivian. Thoughts on ServiceNow? ServiceNow is a good company, but so technically, let's just, because we'll do it from a technician perspective. Here's this last base, right? So this needed to hold over its 50-day 146. I think ServiceNow has had a big bounce off the lows and needs to digest this a little bit. So I think that your dip buys could be as low as 135. But this, wow. ServiceNow's been that kind of consolidation for that long. Well, this is Snowflake. Jesus. You guys messed with me. So that was Snowflake, if you know. ServiceNow. Well, ServiceNow has not been in that kind of consolidation. Ooh, okay. ServiceNow is not bad. This one here. So this is sketchy. This is real sketchy. So this is what we call like a broadening formation, like a megaphone. If you're not familiar with that, megaphone. So megaphone here. If this cannot get back up over 783, you're in trouble. Danger, Will Robinson, danger. Let's call it here. You're in danger of going back to the bottom of that range. Just kind of is what it is. At least that's what the charts would tell you. But for right now, I wouldn't short it. This guy, so this is what I'm looking at. There's a lot of buyers accumulating right in here. Big pivot zone. And that's going to line up to your 20-day right now. So 748. And you want to see this when you drop into a smaller time frame. There it is, right? So it's right in here. You're holding this day's high. This looks constructive. So as long as this is going to be just like all the rest of those broken downtrends, if you break out of a downtrend, this is your downtrend. You come back down. Oh, guys, this might be really good. Come back down, retest the top of the downtrend. Who asked for this ticker? Anton. Was it Anton? No, it was on SK. I am looking at this chart and the technicals are telling me that I should probably buy this. Dead serious. As you get this retest of this broken downtrend, that's a money shot, boys and girls. So how do we know when it's going up? So we know it's going to go up if, so you'll take this pivot here. So I need to see a high. So 777. That's like a religious number, right? 777. If it's back over 777, closing above, we are in the clear. What you don't want to see is you don't want to see ServiceNow closing below 755. In that event, this is trouble, Will Robinson. But for now, stay the course. This looks like a stay the course. I think maybe this, was it the software sector? IGV is a software sector. Yeah, IGV as a whole software sector got a little hit. I mean, look, that's all-time highs. That's not bearish. Intel, MCP. Intel was I actually Target acquired so far. So this is Target 34 right here. So we had this big consolidation, massive consolidation. Boom, breakout. I posted this. I took this trade. I posted it. I was like, look, I'm up like a 33 call for the monthly at $30. I closed at like $1.50 this morning. And I still have a little bit left. I mean, whoever laughs, though, like, what's a 300% trade is average? Look, man, what can I tell you? Anyways, this is crazy. But the target is acquired here. These are as tight can be. That's why on these simple moving averages, I mean, that's a power move. But we filled this gap, right? So an extension here. Look, I'm not a fan of Intel. I'll just tell you that much. I don't want to own this stock. I mean, unless China invades Taiwan, then I'll own the crap out of this stock. But I don't think they've invaded yet. I would say 35 is your upside initially, and then you could take this. I mean, we might as well, since we're doing a lot of these 52-week high, 52-week low swings right now. Sorry for my expressions. This thing says 40. I mean, I guess so. If you play this moving average ping pong, which is what we do, so we go moving average to moving average, it would take you to 38.90, close enough for government work, right into this zone here. Yeah. I think that's where you go eventually. It's just a matter of when to take the next shot. For now, I took the shot. Now you just trail out with your runners. Unity, I don't know what to tell you, man. This does not look good. Unity does not look like a good stock. I know my buddy Shy is hating life if Unity shareholder owners. I mean, Kathy seems to like it, but Kathy likes a lot of things too. I would say, look, you're probably decent for a dip buy. 1833, you need to get over. That was that nasty breakdown right here. Here's the thing with these SMA simple moving averages, your 20-day simple moving average. This is not, I know this chart says 3 hour, but remember, all of my simple moving averages are locked on the daily time frame. So whatever chart I'm looking at, they're in the same spot. It needs to have a close over its 20-day. The second that has a close over its 20-day, and it's really trying, it's not there yet, but if it does have a close over, then it's likely that you actually shoot up like $3 to the 50 and then consolidate. So I think that's what you look for. All right. Oh, you guys, these are still coming in hot. I can't do any more. I'm gonna pick some. Jackie, Dell, Futbucker, Dell. I'm gonna give you guys this. This looks ripe. real ripe. I had this first watch for the day, DELL, long Michael. All right. So Michael Dell is breaking now, active. So this morning, remember we're talking about the simple moving averages, tight as tight can be, tighter than my son's cheeks. That's all I can tell you. Right here, right now, this is juicy. So I think this is swingable, meaning overnight. One more time. What you have to look out for is this level right here. So remember, the first break out of a downtrend is not usually the one. So the first one, not usually the one. This one is different in the sense that it started to break. Let me see, is this right? Looking like it's breaking, looking like this continuation here is a boom, go. By the way, intraday, if you pattern traders out there, not that I am one, I'm not, but you have to know what they are. There, you might have people out there be like, oh, this is like ugly head and shoulders. No. This is already invalidated. For a head and shoulders to work to be a thing, like the right shoulder has to be way over here. Actually, that was your head and shoulders right there, and that was pattern complete. So now this is going to be an invalidated intraday head and shoulders, or like a bull flag, which an invalid bearish position is like one of the most bullish. An invalidated bearish pattern is like one of the most bullish things that you can have. Get that? Oh, this looks juiced, my friends. So 147.19, she's got to get through. She has to clear 147.19. I think she does. She gets real squeezy when she goes. And then you get to 156. Oh, well. And then you trail out. This is ready to roll. I'm going to swing this. I like this. That's all I got for you guys. Hopefully that is enough. Hopefully you guys got some. I'm going to be on with the mid, I think, Tuesdays from now on. So we'll do that. I'm going to hop into spaces after. I'm going to take a quick break. But guys, it was fun. I appreciate all the support. And if you didn't know, look, it's right over there. We are open for, any newcomers want to come check us out. Look, we send all these trades, watch lists, active trades, live ins, outs, entries and exits, targets, theses, long-term, short-term, swing trading, day trading, futures, whatever you want. We got a little something for you. So come by, check us out, take a look. I love you guys. See you next week.